Time now for the big three stocks, three charts, three trades. Ben Watson will take us through the charts, and here to take us through the trades is Jason Brown from thebrownreport.com and author of 5 Year Millionaire. It is great to be with both of you all. Jason, it's good to see you in person. Ben is, I know, going to pop up shortly. All right, Jason, I'm going to start with the first trade on your list. You are looking at Uber. It has had a strong year so far. It's certainly outperformed the S&P 500. What's your view on it now?
So what I love about Uber is it's in an uptrend, and we had a 10% pullback to about the $90 range to the 50-day moving average, which is technically a place where you see a stock like that find support if it's in an uptrend. And then what I love about it is post-pandemic, people need transportation. Interest rates are high, so they need an alternative if they're not buying a car. And then also their one app strategy where you got one app for delivery, freight, travel, everything. It's all in one place, so I love that. And they're getting involved with delivery. I left my laptop one time going out of town. I literally pulled it up and had someone go to the hotel and bring it to the airport to me. I mean, talk about convenience. So I love the stock.
So delivery beyond Uber Eats there, huh?
Exactly. Which opened up a whole nother market of revenue for them.
Okay. All right. There we go. All right, Ben, I'd love to hear your perspective and what you're noticing about the chart when it comes to Uber.
I'll tell you what, Diane, I spend enough time in Ubers as I travel to recognize the validity of what in terms of their one app strategy. But I'll tell you, the stock here in this particular case, that big upward move that we've seen since April has been pretty strong. A lot of momentum along with that. And you can see that in the RSI, that second panel to the bottom there. But it's seen that little bit of a pullback as we've come into, again, this earnings season. Post the earnings announcement, saw a big move to the upside, but sitting back down on support around the 82 mark. But that gives us an opportunity potentially for a bounce. Now, I drew a diagonal trend line there as a resistance that maybe becomes the challenge for this stock to break out of that diagonal and come off of that level with some momentum. It's kind of been hanging out around this 82 level a bit. The RSI starting to turn its echoing price, but what's lagging a little bit is that MACD momentum. So just not a lot of oomph yet. But if it does, that could bring the stock again back up to that $90 mark, perhaps even back up around that 94, 95 area where it reached that previous high, Diane.
Okay. All right. That's some great perspective there. So, Jason, I want to know more about then. Jason, tell me your approach from here.
So my thought on the trade, I'm looking at the March 2026 77.50 call option. That gives you plenty of time. The stock is already pulled back. I don't see a reason for it to pull back even further. So it get us in at the moving average, and then you're looking at about $17 for that call option, or $1,700 a contract. What I like about it is the break even is 94.50, and if you look at the chart of Uber, we know that it went as high as about $94. So, meaning even if it gets back to there, as long as there's some time left, there'll be some premium in that option to rake in a profit.
Okay. All right. Let's move on to your next trade, Jason. I know next up we've got RDDT, Reddit. We've got the social media space in focus right now. It has been a significant underperformer of the S&P 500 year to date now. So what's your view from here, bearish or bullish?
I'm actually cautiously bullish on Reddit. This is more of a low-risk, high-reward play. The stock was trading around 228. It fell as low as 85. So this thing has gotten over a 50% haircut. But when you look at the technical analysis of it, I always say when a stock is, how do you know when a stock is done going down? Once it starts going sideways. So this stock right now is channeling in a sideways channel, giving you a real risk-reward defined ratio. It double bottomed around 95. And the average analyst price is about 140. So I think picking it up or looking at picking up some options where it's at, it gives us a low risk to high reward ratio relative to where it can go versus how far it could fall.
All right, Ben, then tell us what you're noticing about the chart when it comes to Reddit.
Yeah, Jason made a good point there in terms of this sideways move. And, you can sometimes look at this as a basing pattern where the price of the stock establishes a level of support and starts to build some momentum. And I think maybe that's what's going on here a little bit. However, there's a bit of a caution. And, this is a stock that hasn't been around for a while. So I've got the 200 period moving average on there. You can see where that starts about midway through this 9-month chart. But you look at where this resistance area is right now, right around 122, where it's tagging that 200 period moving average and kind of backing down from it a little bit. The challenge is to get out of this basing pattern. If it does, 174 becomes kind of the measured move simply from a technical analysis perspective. But it's lagging. It's having a hard time getting back up to that 127 resistance that it's tapped once, twice, maybe 3 times here in the last 2 or 3 months. RSI is moving higher, MACD is moving higher, so it's got some momentum, but it seems to be failing that challenge right here at that 200 period moving average, Diane.
Okay, so it seems to be failing that challenge at that 200 period moving average. So Jason, tell me a little bit more about your approach then.
Right, so knowing that it fell from 228 back in February to as low as 85, the way I see it is it has over 100 points to potentially run, but we have a floor built in around $95. So we have our downside there. I'm looking at this as a trade going out to January 2026, the 105 strike price. It sells for about $32.50. That puts your break even at $137.50, which will, if you look at the chart, March 17th, the stock is trading around 141. So even if we just get back to that level, if we still have some time left, you should have some positive premium and profit in that option. And then if it falls below the 105-ish level, you got to take a small loss and consider you don't want to get stuck in this thing going sideways or even slightly lower. Okay.
All right. Well, okay. I like the way you explained that setup there. All right. Let's take a look at the last ticker on your list. You've got CPA. We're not talking about certified public accountants here. We're talking about Copa, also not the Copacabana. Ben, I think I just stole one of your puns there. So you might have to come up with a new one, but you got time because we're going to listen to Jason's view from here. It's been an outperformer compared to the S&P 500. So what's your view on where it goes from here, Jason?
So I'm looking at CPA or Copa Holdings as a pure technical play. The stock has hit resistance around 110, 112, at least I'm counting about 4 or 5 times. It's in the air and travel space, primarily in Latin America. You know, with everything going on, sometimes people aren't coming here and we aren't going there. And then they face some headwinds with currency exchange as well. I just don't see a reason right now for the stock to break out above 112. And so the strategy that I'm looking at here is one of my favorites, which is a bear call spread, because the stock doesn't have to go down. It could go sideways, and if it goes up slightly, you still make money. And so I'm looking at the July 125 calls. You're buying that one. You're selling the 120. You get about a 50-cent credit. You get a 25-cent credit. My apologies, but the risk you're putting up is $475 for a 25% credit, a 25-cent credit. That's about, about a 5% return on that trade. But what I love about it is it doesn't have to go down. It could go sideways. It can even go up, and you still have the potential to profit. Okay. All right. Hold that thought. I want to hear next. Ben, tell us what you're noticing about the chart for Copa.
Well, I'll tell you what. First of all, Jason's trade here, that short call vertical, is a little bit like staying off the dance floor and still getting paid for the dance. And this move here on Copa Airlines has been a very strong upward move, right? Really, since that April low, it's been a pretty big momentum move. However, we've got a double top up here around that 110 level, breaking the support at 106.5. In fact, today, making that break to the downside. And that becomes significant because that could pull this back down into that 101 level. Certainly benefits that short call spread that Jason's talking about here. And you can see echoed in the RSI and the MACD, those two momentum indicators, that there's a little bit of downward momentum. If, on the other hand, it finds some level of support in between 106 and 101 and starts to rally back up, again, the benefit of this type of scenario is that it could simply go sideways, it could go up a little bit, it could go down a little bit. All of those benefit the trade that he's talking about. But from a technical perspective, and you know, Diane, music and passion are always in fashion when we're talking about technical analysis. This move to the downside could take it back down to that support at 101 half. Diane?
Okay, all right. Thanks for that. That's fantastic analysis. I always love your perspective, Ben. Jason, Jason, I'm going to yield the floor back to you. And I'm curious to know, is there any way this dance that we're doing could go wrong?
With Copa, well, here's the nice thing I like about it. You have a $15 cushion, so the stock can move up $15 before we get into any range of trouble. So that's why I like that play. You have insurance policy, what I like to call it, built in, and then it can go sideways or down. You got 3 ways to make money.
Okay, and I want to get a final thought from you, Jason, about the market action we've been seeing. We're kind of range bound today, but it's been kind of this steady churn higher. Do you expect this to continue?
I think we creep higher a little bit. We got what we were looking for, which was a pause in the tariffs. Now we need something permanent. We don't need this temporary back and forth stuff. So until we get that, and until we get something from the Fed with respect to interest rate cuts, it just makes sense that we're going sideways and going to be range bound as we tiptoe back up to potentially the highs on the S&P or the Dow.
All right, thank you, Jason.
Thanks for having me.
I appreciate that. That's Jason Brown of thebrownreport.com and our very own Ben Watson. Ben, I got to talk to you twice today. I love that. A 2-4. All right, thank you, guys.